Alright guys, welcome back to another video. And in today's video, I want to show you how to completely master ICT concepts. Now, I know you've probably been doing a lot of research on ICT concepts. You've probably watched full free courses, okay, of all of the concepts. You know what they mean, at least a little bit, like you understand the meaning of it. You haven't really perfected it yet. However, you're still a beginner and you want to know how to use them because you see ICT profitable traders, but you don't know what makes them profitable. What is that little secret piece? And there are a lot of things that come into play. But for this part, which is the actual concepts, I want to give you a little rule to go by on trading ICT concepts. All right, so let's get started. And I want to turn on just these two indicators real quick, which show me market structure shifts and fair value gaps. Let me delete these. Okay, so here we have a market structure shift. All right, it breaks through with nice, beautiful displacement right there, showing a bullish momentum. So what we want to do is we want to take a bullish trade in that direction. So the first confluence is the displacement and the market structure shift right here. Let me circle that real quick. So that's the first confluence. All right. And now we have to look for a second confluence, which is right here. This fair value gap. We want to enter in off of it. So long position, we would enter in right here, right when it touched it. So I like putting it on the middle. Put your take profit to a 1 to 2. Beautiful. Okay, so as you can see, two confluences, beautiful trade on the 5-minute time frame. Didn't even take 5 minutes for us to get a 1 to 2. Okay, and I want to explain what this means. This is the unicorn model, and it is by far the simplest explanation of ICT concepts overall. So the unicorn model is you just get two confluences or more, no, actually two confluences, and then you take trades using those two confluences. So it's that easy, and that is what ICT concepts is. You have to know all the concepts. Once you know all the concepts and what they mean, you have to pair up two or more to take a trade. And you have to make sure the higher time frame analysis matches with your lower time frame analysis. Now, what does this mean? It means that there's no opposing order blocks, fair value gaps, inverted fair value gaps on the higher time frame. For example, and I'll give you an example because I know a lot of people don't explain this, and I was confused too in the beginning. We have a bullish setup right here with two confluences, beautiful displacement, beautiful fair value gap. All right, but if we head over to the 15-minute time frame and we were in a, let's say, bearish order block, I would not want to take this trade. Or if I was in a bearish inverted fair value gap or in a resistance area, support and resistance in a bearish resistance area or anything like that. That is what people mean. They say the higher time frame must match with the lower time frame. Okay. So let's take a look at a few more examples. So let me get rid of these. You saw that. And you should kind of get it by now. So let me turn on these. Resistance, SMT divergence. Perfect. These are just indicators to help me spot order blocks, breaker blocks, things like that, because I am terrible at spotting these. So here is support and resistance, these little areas. Right now there are resistance levels. Here is support, little green box. Here is the fair value gaps, and these little lines are bullish and bearish SMT divergences, and you've already seen these are market structure shifts and break of structure. It would be another nice setup, by the way, just letting you guys know. Right there, you could have taken that and catched a nice trade. 2 confluences, break of structure, and a fair value gap. Unicorn model works great. So let's take a look at a trade with 3 confluences. And let's say you have 2 confluences. On the 2 confluences, you're only risking 1% or a low percentage. You can make your own plan. I have my own plan that I use for my risk management. And for my 3 confluences or more, I risk 2% or at least 1.5%. So let's take a look at this trade. This trade has 3 confluences. How? Well, we are in a bullish fair value gap. We've just hit a bullish area of support. And we just made a bullish SMT divergence, hitting the bullish area of support while being inside of the bullish fair value gap. That is 3 confluences, and this is huge. So we're going to take this long position after this candle ends. Should be right here. And set your take profit, set your stop loss. I like to do it at the middle. Just an area that makes sense. Alright. Right there. Take profit to a 1 to 2. Beautiful. Okay. It's that simple. You're only going to look for 2 confluences or 3 confluences. You're going to go to the 15-minute time frame or a higher time frame than what you're on, and you're going to make sure there's no opposing order blocks, breaker blocks, all of the ICT concepts that you can think of for an A+ setup. And that is what they mean by a huge win rate, and that is how you see people making big numbers. Okay, less is more, and that's especially true in trading. So I just want to let you guys know of this very simple thing, but very confusing thing at first. So I hope you took notes, because if you didn't take notes, rewatch the video, because you're going to forget all of it and you're not going to understand as clearly. I had to take notes, so if you're really dedicated, take notes and rewatch. Alright, anyway, I hope you guys enjoyed the video. I have a free Discord server in the comments and in my bio if you want to join. I trade live daily, and I take setups, I give free signals, I give free videos. It's a beautiful community filled with inspiring traders and people who want to grow and become better at trading. So without further ado, I hope you guys have an amazing day or night, and I will see you in the next video.